And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible, that we can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comments section below and we'll do it together. And finally, remember, this is not financial advice. This is all for entertainment purposes only. Cool. All right, happy Tuesday. Let's check out our open positions. The USO got filled. We did a short put, not a spread, just a short put. Got filled at 70, trying to get to 35. Oil's up today, so we're marked 56. On our way, we're up 14 bucks or so already. XHB flat, trying to get to 25, open to 51 or something, right at the mark. Roku is a roll, trying to get to 34. We got plenty of time. Looking fine on that one. SPY, we're going to start thinking about rolling this one. IWM, this one's right on the fence, so we're going to kind of play it by ear here. And XBI, we're going to start trying to roll this one as well, okay? But first, let's find some new opportunities before we talk about rolling. Wells Fargo's first, WFC. Now, I know we have bank earnings coming up, and Wells is included on that, but Wells has gotten 2 downgrades in the past 2 days. Oh, it's a double. Wells cut to hold at Deutsche and upgraded by JP Morgan, so conflicting upgrades and downgrades. And then yesterday, downgraded it at Baird. So earnings are on the 12th. That's in a couple days. The banks will be very interesting to watch for their earnings just because they've had such a big run up. There's a question yesterday about JP Morgan because that one's near all-time highs. Let's look at Wells really quick. Let's move from 39 to 49. It's an okay move. Slight pullback as it goes into earnings. I'd actually rather look at JP Morgan just because you'll get paid more because it's a $170 stock. And like I said, it's near all-time high. So their earnings are on Friday morning before the open. So we're looking at a Thursday trade open, shorting the call side into earnings for February expiration. At this point, I wouldn't open the position yet. We're looking at selling the 180, buying the 185. JP Morgan down slightly today. So we'll keep an eye on this. We'll come back on Thursday in 2 days. Next, HPE down today. Looking to buy Juniper. Earnings are on March 5th. So we got plenty of time. Here's our chart. Gap down. Looked like it's hitting the 200-day right now. When past, it's kind of bouncing on the 200-day. Plus, we have this ascending trend line. Let's look at the put side. It's only a $16 stock, so this may not be worth it. A little bit of volume today, but not worth it. Skip the call side too. Let's look at Juniper then. That should be up 20%. Earnings are January 30th. A little close here. So it looks like it gapped up, had a huge rally up to 38 and is already sold off. That makes sense. Not enough volume here. And not enough strikes available. We'd have to move past 40 for the short leg. Put side to a liquid. You've got 90-cent spread here with very low volume, very low open interest. Interesting, fun to look at, but not something we can trade. Match group. Next, MTCH. I can't remember what the news was. They're up 5% already. Elliott takes $1 billion stake in Match. There you go. Gap up, selling off already on the news. So would have wanted to sold this on the open. It may be a little too late to get in on the call side. You'd want to sell 47.5 and buy 50. Spread's not bad. 8-cent spread here, 9-cent spread here. But it doesn't look like it'd be worth it. $250 spread. 66 minus 41 divided by 2 divided by 250. 5% right on the nose. 47.5. 47.5 is right here. That seems fair. But again, you would have wanted to open this at, or you want to open the position right at the open. We may have missed this one. I'll put a mark on it. Maybe we'll come back. Next up, Paramount. PARA. Down 2% today. An upgrade to neutral. Even though it's got the upgrade, it's still down 2%, so it doesn't seem to be moving the stock as much. Pass. Next, Netflix. I think Netflix got a downgrade today. Going into the quarter earnings report, January 23rd, so we're a little too close for this one. Maintains at Goldman at neutral. I think there's another downgrade. Citi downgrades Netflix. So maintain at Goldman and downgrade at Citi. We'll have to wait till after the quarter. Personally, I don't like opening positions so close to earnings, so we'll wait for after earnings. If there's a big move that moves farther than it's priced into the options market, then we'll go ahead and open something. But right now, before earnings, I think we'll hold. PayPal's next, PYPL. News here. Loses bull rating at Morgan Stanley. So it looks like a downgrade at Morgan Stanley to equal weight. Earnings are on the 8th, so we got about a month till then. So with the downgrade, it's already come back a bit. Let's take a look. On the call side, if you sold the 70 and bought the 75, this one's priced pretty well. 115 minus 57 divided by 2 divided by 500, almost 6%. That's actually not bad. We got a month till earnings. We'll mark that one down. Put side, if you sold the 52.5 and bought the 47.5, 66 minus 22 divided by 2 divided by 500, 4.4%. So we've got call skew. Selling the 70. Where's 70 on the chart? 70's up here. But remember, we are getting close to earnings, and it's going to make these option prices a little bit more expensive. Cool. We'll keep that one on the list. NVIDIA, NVDA. I don't think there's any news specifically on this one. It's just at all-time highs. So when I hear all-time highs, I think selling call spreads, especially if there's a big run up into it. Earnings are on February 21st. Here's our chart. Big day yesterday. Like the overall market had a big up day. Closed at all-time highs. Has opened up and is continuing to continue higher. Let's look at the call side. February 21st. So February expiration is before the earnings. So this February, all these prices don't include earnings. So that's something we won't have to worry about. Call side. If you sold 585 and bought 590, It's 650 minus 575 divided by 2 divided by 500, 7.5%. That's not bad. 585 on the chart. 585 is right about here over the next, 38 days. Can it get there? For sure. I don't know. If it continues to move up at this rate over the next couple days, say a week or so, then maybe consider opening the call spread. Let's have this run up and then a pullback. Let's wait for another run up, say to 350, 355 or so, 360, and then have hopefully another pullback. This one's not bad either. A slight pickup in volatility here. Next, Unity, ticker U, down 7%. Earnings are February 21st. We got over a month. Great. Maintained at neutral. Something else is moving it other than that. Announced its fourth quarter results. Is this an earnings report? No. I think they just pre-announced, and they cut 25% of their jobs. Usually a job cut is good for a stock. This time, not so much. Wedbush raises price target to 50. I guess it's just cutting of 1,800 employees. So here's our chart. Kind of in no man's land here. So put side, if you sold 29 and bought 25, or just sold the 29 right out, that's 48 minus 13 divided by 2 divided by 400, 4.3%. Or if you just sold the 29, collect $50. Call side, you'd have to sell. Yeah, good liquidity here. That's good. If you sold 43 and bought 47, 90 minus 44 divided by 2 divided by 400, 5.7% there. 44 on the chart. 44 is up here. It seems awfully close. I don't know, the chart, it's kind of just hanging out here in the middle, so there's no clear movement. There's no movement to the downside to sell puts, and there's no big movement to the upside to sell calls. It is approaching the 200-day moving average, so it could catch a bounce from this support right here around 33, and your 200-day around 33.75. So maybe keep an eye on this one till tomorrow. Unity at 34, 33. We'll make a note of it, come back tomorrow. All right. Let's check in on a couple things we've been watching. We already looked at JP Morgan for their earnings on Friday. We'll check in Thursday. Let's check in with McDonald's MCD. What were we waiting for? I think we were waiting for it to get to 282, right? To sell puts. Hold on this one. Gold. Gold is up today. Again, just hanging out here until we have data on Thursday and Friday. We have CPI and PPI. That'll move the gold market. Let's look at the call side. I know we looked at the call side either yesterday or the day before. If you sold 196 and bought 200, it's 102 minus 52 divided by 2 divided by 400, 6.2%. It's not bad. 196. 196 is way up here. That seems fair. And again, I know I sound like a broken record, but I'd rather wait for gold to hit an all-time high again and then sell some calls. We're just kind of waiting for it to make a move in either direction. I don't care. If it goes down towards 182 at the 200-day, then it still puts here. Got this ascending trend line plus the 200-day to give it a bounce, but Let's look at USO, oil. Like I said, our position got filled yesterday. We sold the 59 puts, right? So 59 is down here. It's up slightly today, so we're already making money. Up 11, 12 bucks. Want to open something today on the put side. Sell 60 and buy 56. That's 72 minus 31 divided by 2 divided by 400, 5.1%, or just sell this 60 straight out. If you did have to be cash secured, have $6,000 of cash available, or have level 4 option approval. Cool. We'll keep an eye on this one over the next coming days and weeks. All right, let's look at our IV rank scanner, and we'll sort by volume. URA, oh sorry, there we go. Tesla's first up, has earnings on the 24th. So, too close to that. Russell IWM, I know it's down today. Here's our chart. Had a good day rallying yesterday. Opened up down and hasn't really moved much. And we are short the 197 call. So that's good. And we bought the 200. So $300 spread for us. Right now, both legs are out of the money. This was a roll from December to January. So we just have to wait on this one. Again, we're in good shape. Don't have to do anything. But if things continue to move up over the next week or so, we'll have to roll. But right now, he's going to have to wait and see. New positions, though, for February expiration. On the put side, if you sold the 181 and bought 175, that's a $600 spread. 113 minus 59 divided by 2 divided by 600, 4.5 on the put side, or just sell the put straight out. 181. That doesn't, you don't really get paid for it. Call side though, 207. You get paid for that one. 207 and buy for sure the 213. It's 125 minus 51 divided by 2 divided by 600, 6.1%. So yeah, call skew on this one still. That seems fair. Where is 207 on the chart? 207's right here, but for February expiration, that seems awfully close. I don't know if I'd take this one. Pass. Apple. Earnings on the first were too close at this point. AMD. We had an AMD trade like a couple weeks ago. Earnings may be coming up, though. Yeah, earnings are on the 30th. We're too close. We'll wait on this one until after earnings. This is the semi ETF. It's getting a little bit of volatility priced in. Call side. He sold 184 and bought 191. That's $700. 134 minus 51 divided by 2 divided by 700 almost 6% there. Selling the call side on the semi ETF 184. 184 is right here. Again, that seems awfully close considering earnings are included here ever so slightly. I don't know if I'd want to sell the put side. If you sold 158, that seems fair. Selling 158 and buying 151, 129 minus 61 divided by 2 divided by 81700, 4.8%. It's an ETF, so ETFs aren't as volatile as the underlyings are. Keep that in mind. You won't get paid as well. Boeing, we're going to wait for earnings on the 31st. I know they're down again today. And then United, let's check out United because I know United found some problems with their planes yesterday. It was announced. Oh, they're up. Interesting. I know Boeing's down today, right? Yeah, Boeing's down, second day in a row. I was looking to sell the call side after earnings, but this news happened. So now maybe if post earnings there's a big gap down, we can sell puts around, oh, I don't know, the 200 day. We'll have to see. We'll have to wait for earnings at this point. We're too close to earnings, so we'll wait till afterwards, see what happens, and then maybe make a move then. Okay? Let's take a look at Spirit and not Spirit that manufactures these parts. Had a wild day yesterday. Calmed down a bit today. Earnings are February 7th, so we're a little less than a month away. Any downgrades or anything? Cuts from hold to hold from buy. Law firm investigation. Interesting. Let's move on. AMD, Amazon. I think they've got earnings coming up. Microsoft, same thing. An emerging market ETF. Let me check that one out. EEM. It does have some heightened volatility here. Let's check it out. We want to sell the call side here. They've had support here 1, 2, 3, 4 times, and it's approaching it again. If it breaks down, it'll continue down. Call side, if you sold the 41, you get paid a whopping $20. And you'd have to buy something farther out. You'd have to buy the 42, a $100 spread. Boring. If you got the guts and you've got the approval, you can sell the call straight out, but I would not recommend that. Put side, evenly priced, same thing. Sell the 37, get $19. Not really worth it. Moving on. Marathon. Has there been any announcement yet on the Bitcoin ETFs being approved from the SEC? That's kind of what we're all waiting for. MARA. Earnings are on the 29th here. Big move up, a violent pullback, but looks like it's coming back again. We have front month volatility descending here. Is still a diagonal? Interesting. Sell the February by the March. Hold on 1 second. $39. There's not enough strikes available. 39. 39 pays 197. No. Skip March. He sold 39 and bought 46. Liquidity's okay on this one. $197. Sorry, minus 125 divided by 2 divided by what? 600? 39, 46, 700. 5.1%. Skip. Tilray. Nope. Meta has earnings on the 1st. PayPal we already looked at. Once we get earnings starting to roll out, we'll have a lot more opportunities. The week right before earnings start is a little hard to start something new. Coinbase. Netflix we already looked at. Citigroup and Bank of America both have earnings coming up. Unity, we already checked that one out. Pfizer has earnings on the 30th. JD, no. T. Earnings on the 24th for AT&T. ExxonMobil, we already have USO open. Exxon, when are their earnings? We looked at Exxon yesterday. They're down. What? Oh, they're down with the market, that's why. Even though oil is up, Exxon is down. Upgrade at Exxon doesn't seem to help. At Redburn, February 2nd is earnings, so we're less than a month away. That's unfortunate. Good support here around 97.5, but if it breaks down below there, well, could catch a bounce. That one's too hard. Could catch a bounce around 95.25. Maybe. If not, you got to go down to 93. Not going to get paid on the call side. Put side, same thing. It's not really worth it. We'll skip that one. Exxon. Jets. Google has earnings. SoFi. Earnings everywhere. GDX, we already looked at GLD. Riot. Next page. Verizon Wireless has earnings. Snapchat. Merck. Earnings. Ford has earnings. Disney, earnings on the 7th, about a month away from there. Celsius. Up 4% today. Wow. Earnings are February 28th. Great. What a chart, man. Never tried this one before, so I don't know much about it, other than it's a drink. Call side. The 70 is a little too close, and the 73.33 is a little too far out. If you sold 70 and bought 75... Actually, pretty good liquidity here, so that's nice. 138 minus 70 divided by 2 divided by 500, 6.8% there. But like I said, the 70 is a little close for comfort. There's 70 on the chart. 70's right here. I don't know if I like this one. I'd rather wait for it to move above at 70 and then sell the call spread at 70. That would be an all-time high for it. It had this big sell-off, and now it's coming back up. Maybe sell the put side. If you sold the 50, bought the 45, that one seems perfectly priced. There's no edge here. 69 minus 26 divided by 2 divided by 500, 4.3. That one's priced to perfection. It's not very overvalued. If you sold the 50 straight out, you can do that. $5,000 in cash to do that. 73.50 on the chart. 50's right here. This one seems very fairly priced. $0.10 spread. If you get into trouble, you should be able to roll it, no problem. Let's keep going. TSM earnings on the 18th. Uber and Chewy don't have earnings coming up. Let's check them both out. Uber's earnings are on February 14th, so never mind, they are included in this one. BMO initiates with an outperform. Wow. And sell a call spread if it got to around 60, 50. Call side. If you sold 67.5 and bought 72.5. 93 minus 58 divided by 2 divided by 500. Did I mess it up? Yeah, I messed it up. 92 minus 36 divided by 2 divided by 500, 5.6. Not as good as I thought it'd be. Put side sold 52.5. $52.5 is right about here. That seems too close. Pass. Chewy, CHWY. Okay. Wish we sold puts yesterday. That would have been nice. Hold on. Earnings are March 20th. Great. Don't worry about earnings. There is some heightened volatility here. Great. We may have missed the boat from yesterday, but check it out. If you sold 17.5 and bought 15, 26 minus 7 divided by 2 divided by 250, 3.8%. I don't want to sell the put straight out. Call side. Skip the call side. Moving on. TNA. Palo Alto. I wonder why that's on the list. Earnings are February 21st. Well, if you want to sell the call side, it's hitting resistance here, which makes sense. February earnings on the 21st. Not very liquid. 20-cent spread at the 330. 340 slightly better. 10-cent spread here. I don't like this one. Let's move on. American Airlines. Affirm. AFRM. Let's check it out. Earnings are February 7th. They had this great run up into the holiday season with shopping and buy now, pay later. Now that the holiday season's over, things are kind of topping out. I wouldn't be surprised if this just kept moving sideways or down some more. Less than a month from earnings, though. That's no bueno. If you sold 60 bought 65, 154 minus 103 divided by 2 divided by 500, 5 on the nose. Not bad. Put side, if you sold 30, bought 22.5. 69 minus 16 divided by 2 divided by 750, 3.5. If you sold the 30 on its own, $30's way down here. That's interesting. Man, tough. Pass on this one. Wells, we already looked at. Bito end phase, no thank you. Zim, Lilly. Lilly has earnings on the 6th, and of course they're at the conference. AbbVie has earnings. Goldman Sachs has earnings. Albertson, the 9th before the open. ACI. Not tradable. Walgreens. We're looking at Walgreens. WBA. No. Pass. One more page. JP Morgan, we already looked at. XBI had a monster day yesterday. I have to start rolling this one. Actually, why don't we set that one up right now? Let's look at XBI. Down ever so slightly. So we are short the 85 and long the 90. This one's pretty much underwater. So what we'll do is going to cancel this. Go to our XBI position, and we're going to go to roll, close out January, and open February at the same strikes. I know it's not an option, but we're going to do it right at 0. So it'll cost us nothing but commissions. You won't get a credit, but we won't pay to roll it. And we'll set this as good till canceled. So over the next couple of days, this can get filled. Great. Buy us some more time. So we're going to close January by buying back the 85 and selling the 90. That'll close the call spread there, and we'll open up the same call spread here for February expiration. Okay, and let's just buy some more time. All right, preview this, double check this ticket. Buy 185 call to close and sell 190 call to close for January, and then sell 185 call to open and buy 190 call to open for February. Cost us 5 cents. Doesn't really mean it costs us. We're rolling straight across, just buying more time for free. Go ahead and send that out. This will hang tight here. Hopefully it gets filled. If not, we'll just leave it open till expiration and just hopefully give us some more time. Okay? But if you want to open a new position today, call side February. Here are the open positions we're trying to roll. For a new position, I would sell the 103. Sell 103. and buy 107. $91 minus 47 divided by 2 divided by 400, only 5.5%. So I wouldn't do this one anymore. You don't really get paid for it. Maybe the put side pays more now. If you sold 84 is a little close, but if you sold 84 and bought 79, 89 minus 36 divided by 2 divided by 500, 5.3. I wouldn't open a new position now on this one. But we'll see if we can roll this one. Going back to the list. Anything else? Moderna. Man, I wish someone was more liquid. We would have sold that call spread if it had more liquidity. USO still has some volatility to it. We already looked at USO. Cleveland Cliffs. Earnings on the 29th. Nice. Micro strategy. Just waiting for the Bitcoin stuff to happen. Morgan Stanley earning on the 16th. The KRE. Sure, let's check out the KRE as we approach the bank earnings. Here's our chart. Like I said a couple of weeks ago, I'm waiting for it to get to around 56 to sell the call spread. It's going to hit an enormous amount of resistance as it hits this area between 56 and 58. So if this ever gets up to 56, even if it happens post earnings, I'll sell the call spread. We're getting close. Let's just take a look. Put side, if you sold 46, you get 39. Call side, if you sold 57, you get 45. So some call spread here, or sorry, call skew here. My bad. If you sold 57 and bought 59, you'd have to do, you're not going to get paid, 45 minus 24 divided by 2 divided by 200, 5.2. Yeah, it's an ETF. It seems fair. 57 on the chart. Again, so 57's right here. Yeah, that seems fair. You're not really getting a good deal. United, we already looked at that one. Match Group, we already looked at. Las Vegas Sands, they must have earnings coming up. I've traded this one before. Earnings are January 24th. Yep, that's why. XLV. Up and away. Approaching all-time highs. So this is interesting. It's gone nowhere since July of 2021. It's just been range bound this entire time. Call side, if you sold 146, a little close. Otherwise, you'd want to sell 147 and buy 150. 51 minus 18 divided by 2 divided by 300, 5.5%. That's actually not bad. The 147. $147's up here. Same thing. If this continued to move up higher to an all-time high, then I'd sell the call side. But this one seems good. But keep an eye on this one. We'll put this on the list for tomorrow. XLV. Starbucks must have earnings. Let's check it out. SBUX. Earnings on February 1st. So there you go. Looking to expand in India. Good. The put side looks interesting here. You'd have to sell 85. This one's right on the nose. Excluding the earnings volatility as well. 85 on the chart. Where is that? 85's down here. That seems very fairly priced. Close, but no cigar. Too close to earnings. Okay. Johnson & Johnson. Earnings on the 23rd, plus they've got the conference going on. Chevron. No. LQD. Let's look at the TLT. We do have inflation numbers coming out later this week. So every time it's come up to the 200-day, it's kind of wiggled around it and then moved back down. Again, will this time be the same? Maybe. It has had a great run since October. A pullback was expected. We sold the call side back in December and made our money and got out in a couple days. Should we try the same game here? Call side February. If you sold 102 and bought 104. $49 minus 26 divided by 2 divided by 200. 5.7. That's actually not bad. 102. It's a $200 spread, so it's a baby spread. 102 on the chart is right here. However, this could be the bounce from support back here. If this bounce continues, we'll get run over. A lot of it depends on Thursday and Friday's data. So we'll look at the TLT on Thursday and Friday. Put that on the list. Chevron, LQD, MCHP. Earnings are on the 1st. Ultra has earnings on the 1st as well. Juniper we already looked at. Pinterest, they probably have earnings coming up. ALB. ALB is next. Surprised to see this one on the list. Probably has earnings. February 14th. Oh, here we go. KeyBank maintains at overweight. Boy, oh boy, what a chart. $100. This one's tough. It's coming up to some support here. Hit resistance here from back in October. It's moving down. Could catch support here and continue moving up, or if it does move down, it's going to break down to a new 52-week low. So just keep that in mind. Put side. These are slightly expensive. Selling the 110, buying 105. 60 divided by 2 is 30 divided by 500. 6% on the put side. That's not bad. 110, 105. Call side. If you sold 160, bought 165. 208 minus 153 divided by 2 divided by 500, 5.5. So you're better off selling the put side. Selling the 110. Where's that? 110 is right here. This makes sense. What's the yield on this? 1.17. Not that great. Oof. This one's tough. I kind of like this one, but it would be a put spread. I'd sell the 110 by the 105. Okay, liquidity. Interesting. Moving on. Coming to the end here, I think. Anything you want to review? Let's look at PayPal really quick. Let's go back to that one. Earnings are on the 8th, so 1 month till then. Never mind, let's go back to match. MTCH up 5% today. Damn. Wish we caught this one earlier. Call side, if you sold 47.5 and bought 50, was that it? 65 minus 40 divided by 2 divided by 250. It's 5% there. 47.5. Damn. What a shame. Earnings are close. All right, now let's just skip it. We had our USO position open, so we got a good portfolio so far. We'll just keep this as is and wait for tomorrow to see if there are any other opportunities. Yep, that'll do it for today. Thanks so much for watching, everybody. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also, tell your friends who are trading to tune in and subscribe as well. We can all trade options together. Thanks so much for watching. We'll see you tomorrow morning.